Good morning, traders. This video is all about my trading plan for April 2021. We're going to go over it in very fine detail. I'll explain what everything means and why it's here. If you'd like to download this trading plan, you could do so very easily by going to the YouTube Trading Armor trading channel. Click on the little Facebook icon. That'll bring you over to the Facebook Trading Armor trading group. You can become a member. Click on Files. And then that'll give you access to this trading plan and many others, as well as my trade tracking spreadsheet and my 2R calculator, all the stuff that you see me use, and my trading videos every single day. So let's get to the trading plan. The idea behind sharing this is not so much for you to use the exact same trading plan. You're welcome to do so. But I think that this is a very personal thing, and this should help you use this as a template to come up with your own trading plan. A trading plan is extremely crucial, and it should be formal. It should be written down. It should be very well defined. I think any retail trader that is profitable, that's a key word there, has a trading plan, and I can almost guarantee you that if they are consistently profitable, they're following it 100% of the time, and when they don't, there are repercussions. So some people make the analogy that imagine if you were trading for a firm or a boss, and the boss gave you a strict set of rules and said, look, this is the only time you take a trade. Imagine it's not even your money, right? It's this company's money that you're trading with, and they tell you systematically, this is when you take a trade, this is when you exit a trade, no matter what, win or lose, this is what we want you to do, and you follow that plan, and if you don't, you lose your job, right? It's not about you making the money because it's not your money. So that's what the trading plan should be, and that's how you should trade. This money is not your money. It is for the purpose of growing your account, and then later on, after you become profitable to a certain degree, you start paying yourself out of that account. That's how it should work. So let's get to the plan. I trade all or nothing 2R trading. So what that means is the simplest explanation. If you watch my videos, you already know what that means. But I figure out the risk based on the chart, and then I double that, and that's my profit target. So if I'm risking $5, my profit target is $10. That's not a really realistic number, but it gives you the idea. If I'm risking 10 cents, my profit target will be 20 cents per share, right? So that's it. And the reason why that's so powerful is, let's just take a look at my March trade tracking spreadsheet here. You can see my win rate was, this is February. We'll get to that one in just a second. My win rate was 55% in March, yet that doesn't sound very good. My account grew 10.5% just from day trading only, and that's an important detail, and I'll explain why in a second. But you know, you would think, oh, wow, if you're near 50%, you're pretty much break even. Well, that's the beauty of the 2R all or nothing trading, is that one of my winners theoretically knocks out two of my losers. Sometimes one of my winners knocks out three of my losers. Sometimes two of my losers are, as big as two of my winners. So that's why I say theoretically. But the average means that typically one of my winners will knock out two of my losers. So here you can see right there, my average winner, $6.39. My average losers, $3.85. Those numbers aren't very large, but again, this is a small cash account. I'm only trading with 10% of the account on each trade. So those are all important details. And you can see that my actual results are not quite 2 to 1. They're 1.66 to 1, but that's very good. There's no such thing as a perfect trading plan. And all these theoretical rules and plans kind of fall out the window when you get slippage and things like that. But still, if you set the bar high and you come near the bar, usually you're going to end up with a pretty good result, and that's what this is. I'm sure there'll be some months where I do hit the 2 to 1 or maybe even exceed it if I get lucky and get some slippage on the way out of a winning trade or something like that. That does happen, but so, and let's look at February, when my trading plan wasn't quite as strict. I refine it throughout the month, every single month. And when I find weaknesses and problems with the plan, I update it, and the plan just gets better and better every single month. So in February, you can assume that it wasn't as good or as strict as it was in March. And the results of that was my win rate was only 36%, and 2 to 1 trading only requires a 33% win rate to break even. So you can see I still made money, not much, but it's a small cash account. Still made money even with a win rate as low as 36%. So that should tell you something about the power of 2R trading. All right, so let's get to the trading plan. That explains the 2R thing. So my starting account value, I like to start with statistics right at the beginning. So if I open this thing up in the middle of the month, I mean, I read it every day, but still, like, let's say I come to this thing in the middle of the month and I remind myself, hey, look, this is how far I've grown the account, that kind of thing. So the previous month, I started with $546.99, and that's how much the account grew. Some of that was from free stocks, and I appreciate those that are clicking the Webull link. That helps make the trading more interesting for you guys, as well as helps me grow my account a little bit, because now my wins and losses are that much bigger and a little bit more fun to watch, I think. But this is my profit from day trading only, no free stocks, $57.23 starting with this amount. That's in 1 month. That's the month of March. So the account growth for the month of March, day trading only, no free stocks, 10.5% basically. So that's pretty good. All right, this is the first and most important thing that you do every single day is check your internet connection before trading. There was a trade last month, March 19th, where everything looked fine. I had this little icon saying I had internet access. I could open up my web browser and the internet looked normal. Everything looked fine. Webull started out looking normal, and then as I was getting into some trades with it, it looked like it was starting to glitch, and I was getting a little bit upset with Webull and thinking, okay, I'm going to have to send them a message later to support, letting them know what's going on. And it turns out after I finished trading, then I went to Facebook and YouTube and tried to upload my videos. I saw that things weren't working properly there either, so I said, let me open up this speed test and check my internet connection. And again, keep in mind that everything looked normal. I had this icon, the web browser was working. It looked like I had internet access. And when I ran this test, my download speed is exactly what is showing you right now, 120 megabytes per second. This is a cable internet connection. And the upload speed, which is normally what it's showing you right now, 6 megabytes per second, which is about 5% of the download speed, it was 0.01, or basically zero. It probably amounts to zero. There's probably some reason where it shows you those very low results. But anyway, basically I had no upload speed. And half of what we do when we're trading is uploading, hitting refresh on the web browser, sorry, not the web browser, but on your trading platform is an upload. And definitely whenever you execute an order, that is an upload. So it makes sense that the platform isn't going to work right without proper upload speed. So it was not Webull's fault. That was my fault, and for not checking my internet connection, right? Our trading system and platform is only going to be as good as our internet connection. So check that every single day, no matter what platform you trade with. That's really important. And then this part is kind of along those same lines, that if you end up in a trade with a glitch, I guess this wasn't actually that day. I got confused there. But this was another instance where I was in a trade on March 19th with MRKR. There's a video showing that trade if you want to know those details. But basically what happened is the candlestick stopped forming, and I thought maybe, there just wasn't much trading volume at that moment. But I knew, better than that as well, that this could be a glitch. So I'm watching very closely. I'm hitting refresh. And then all of a sudden the candles pop up, and 2 or 3 appeared magically out of nowhere. And in that time where I wasn't seeing the candles, it actually came down below my stop. And if those candles were forming, I would have stopped out. Now the price is between my stop loss and my profit target. So I'm thinking to myself, what do I do now? I don't want to break my rules. I don't have a rule to say what I do now, because this thing already stopped me out, but now it's no longer past my stop. It's in between. So what do I do? And I told myself at that moment, let me just sit here on the trade. If it comes down and hits my stop again, I will stop out. Otherwise, let's see if this thing goes to my profit target. It ended up going to my profit target and hitting 2R. And I actually, I weak-handed it a little bit, because I just kind of felt lucky that, hey, this was a trade that I'd be red on, and now I'm green on, and I weak-handed it, a very small amount. But after that, I said, you know what, I need to have a hard and fast rule about this. So that's what this is about. I can't weak-hand it anymore. I can only either allow it to go to my stop or 2R, and that's what you need to be doing. Scaling out and weak-handing is not a way to make money in the long run. All right, so every green trade this month has been in the first few minutes. This is something that I added throughout the month. Like I said, I always update and modify my plan through the month as I see issues with it. There was a day where nothing was happening at 4 a.m. That's when I start my trading every single day in the pre-market. Nothing was happening. I'm watching because my plan at that time said I can watch from 4 a.m. to 5 a.m. to look for setups and trades, and there was nothing forming. And then finally at like 4:56 a.m. Something popped up, and it met my criteria and my setup 100%. So I had to enter it. I entered the trade, and it went against me. And then since I've now taken a trade, as long as that same stock is in the top 3 volume, I have to take the next up to the next 2 entries to try to make up for the loss or end up green for the day. And that's part of my trading plan as well. I can take up to 3 trades, and if I lose all 3 trades, I stop. So this thing gave me some more entries, and it turns out all 3 of them failed. And that's going to happen even when you do everything right and when you're trading at close to 4 a.m. But the point is that I waited around an hour to lose 3 trades, and I felt pretty bummed about that afterwards because it feels like a waste of time, and that's a psychological thing that is kind of a part of trading. And if that really bothers you, you should change your plan. And so that's what I did here as I changed my time limit to 4:30 a.m. That way, if I lose 3 trades in a row, hey, at least I didn't waste an hour just to lose 3 trades. I just watched the markets for half an hour, and that's what I feel comfortable doing. Some people, they'll trade for an hour and a half or more than that. That's not me. So that's up to you to figure out. If anything seems out of the ordinary with Webull, don't trade. If Webull, let me just say really quickly too, this is extremely important. The reason why you should have a time limit at all is because after you start trading for any length of time, you will realize that the longer you sit and stare at the charts, the more likely you are to take weaker setups. So my plan is very redundant and strong, and it won't let me take a weaker setup anyway. But I know that if I sit and watch charts for an hour and a half or 2 hours, I'm that much more likely to break a rule, take a weak setup, talk myself into a trade. So that's why you should have a time limit at all. But it's up to you to figure out what that limit is. So now on to the next thing. If anything seems out of the ordinary with Webull, so this is platform specific. And again, do you really know if it's your platform or your internet connection causing the glitch? No, you don't, because what if it was like a momentary glitch with your internet connection and it resolves itself, in the matter of seconds, and it looks like a glitch on your platform? You don't really know because you can't go back in time and test what was your connection at that exact time. I'm not apologist for Webull or any platform. I'm sure that there are real glitches. I've had issues with Webull, and I've sent messages to support, and they've generally gotten back to me. Webull updates their platform regularly. It seems like almost every week, and I feel like it's a very reliable platform. I'm able to make money with it. That's all that matters, and I don't pay any commissions or anything like that. I don't feel like I've ever lost any considerable amount of money because of a glitch on Webull. If I lose money with Webull, it's usually because I take a weak setup or it's a good setup that just happened to fail. So enough about that. When watching the candles form, always note where you are. This is a really, really important thing to have in your plan. Always note where you are in the 1-minute candle so that you're ready to adjust your entry. Now this is because my entry is based on when a 1-minute candle makes a new high. There's more to it than that, but that's enough to explain this. So that means that, let's say I'm watching a candle at 4:05 and 59 seconds, and I'm just focused on the top of the previous candle to that, and I don't realize, wait a minute, the next 1-minute candle is about to pop up, and I don't even know now what the high of the current candle is, right? So that's a little hard to explain in words. You might have to watch some of my recaps to figure that out. But basically, you just need to know that if the new 1-minute candle, or maybe you're on the 5-minute chart, if the new candle is about to pop up, you better be focused not on the previous candle, but the current candle. Figure out what the high of the current candle is, and that will give you your entry, because sometimes the new candle pops up and immediately breaks out through the high of the current candle. All right, so only enter on the first pullback of an ABCD pattern. I have an entire video about what the ABCD pattern is and why it's my favorite pattern to trade, so you can watch that if you don't know what that means. And I only take the first pullback of that at the very beginning of the pre-market session. And that's because that one is the most likely to continue higher. The second pullback, even if the first one was a success and went to 2R or 3R, the second one is less likely to work out, even though it does sometimes. So that's why I'm not interested in that. I just want the most likely entry to work out. So that's what that is. And then if I get to a chart a little bit later after it's run up, if I can go back and find, oh, that's where I would have entered, then I know that I've missed my entry and I need to move on to something else. So you can just read through that other stuff. It's pretty self-explanatory. Always let the stock establish a new high as compared to the previous session. Watch my live trade recaps. You'll see exactly what that means. But basically, it means that when I'm watching the chart, it must be trading at a higher price than it was in the aftermarket and the previous day. Otherwise, it doesn't matter what patterns pop up. I can't look for an entry. And those are all things to increase the probability of the trade working out. So it's good stuff. And then here I define what a pullback is. So read that and let me know if any of that doesn't make sense, because it's a little bit complicated. But sometimes pullbacks aren't what they seem, and there's a little bit more going on there. So check that out. Let me know what you think, and watch my trade recaps and see if you can figure out what that means. Consider trading the number one volume stock regardless of float. So that's because sometimes the number one stock has a larger float size, and you want the lower float stocks because they can move quicker. And I don't trade like the by the book low float stocks. I think low float is considered like 20 million shares or less, somewhere around there, maybe 50 million shares or less. To me, I've seen a lot of stocks that have, say, like 100 million share float size move plenty to make, a good 2-hour trade. So that's pretty much where I draw the line, is at 100 million shares. And then I tell myself the absolute maximum is 110 million shares, and anything above that is off limits. That way, if it's if you're saying, around 100 million shares, where do you stop? 115, 120? No, I stop at 110. So this nothing over 500 million share float size that's if the stock is the very number one volume traded stock, because that means there's enough volume to move the price as much as a lower float stock, typically. All right, so don't even check stocks until they're in the top 3 volume. So again, I watch my live trade recaps. You'll see me organize the top gainers list by volume, and I'm only interested in the stocks that are in the top 3. So before, I used to look at number 4 and 5 and sometimes put it on the watch list, because thinking, it might end up in the top 3 in just a minute, and I don't want to miss the entry. And that's happened before, and I have talked myself into taking a trade, and then the trade failed, and I look back and it never made it into the top 3. And then I was pretty upset with myself, because my rules say that I can only trade the top 3. So here I took a loss that I didn't need to take. So that's why that rule is here. If a stock pops up in the top 3 but has already finished one ABCD pattern, you can't trade it, right? That's basically what this says. And I talked about that earlier, that if I can look back on the chart and see an entry that I would have taken, then that means I missed my entry and I can't trade it. Doesn't matter what's going on. So that explains that. Don't forget to check and mark the high of the previous session. So I usually mark it with a yellow line. Again, watch my live trade recaps. But sometimes if it's very obvious that, hey, this thing's trading above, then I don't really need to put the mark there. But it is helpful to have, and more for my recaps. At 4 a.m., restarting Webull. And really the important thing there is that if the price is trading below the high of day, especially if the ABCD pattern failed, then I can't take any trades no matter what happens until it makes a brand new high. At 4 a.m., keep restarting Webull until top gainer screener shows only green stock. So this is important, and there's a detail here that you need to really understand. Is I use, right now you're looking at my desktop, and that's what I trade with. So I have Webull up on here, and I start out with the screener, and I get my stocks onto my watch list from the screener view, but I also have the screener open on my laptop. And if the screener looks like it's not updating fully, which happens at 4 a.m., it probably happens on any platform at that time, because that's when all this new information is coming from the stock exchange. And it takes a while, I think, for the platforms to get it all. Excuse me. And the way I get around that is I have my laptop open with that same screener view, and I just keep restarting it on my laptop until I see the list look normal. And you'll know what that is after you do it a few times. But that way I don't have to shut down my platform on my desktop and reopen it and find out, oops, I missed an entry. So that should explain that. Remember that it's always possible there would be nothing to trade. Another really, really important thing to keep in mind, and you really want to read this every single day, because you could get in this feeling of, oh my gosh, I haven't taken a trade, or I haven't had a winning trade in days, and you start feeling desperate to get into a trade. But you need to keep in mind that sometimes the stock market doesn't have any good opportunities to offer you. Nothing meets your plan. So it's always possible there will be nothing to trade if no setups are forming with the top 3 stocks by 4:30 a.m. Again, that's because that's my limit for when I want to stop trading, then I just shut down the platform and move on with my day, and I don't take any trades, and at least I haven't lost any money that day. So you're saving your capital for when the opportunities are there, which is really important. Stay away from all stock market news and YouTube. This is kind of a personal thing. I realize that this doesn't apply so much anymore, but when I was still kind of figuring out what I wanted to do and how I wanted to trade, I found out when I watched other traders, especially newer traders that also had no idea what they're doing, they would, record their videos and maybe it'd be a winning trade or something like that, even though they did something stupid. And you watch that and you think, oh, well, that's all I need to do. And I'll be able to, have a nice green trade. Or maybe you just say, let me try that because it worked that time, and you find out you try it 5-10 times and it fails every time because it was just a fluke, something stupid they did and they just got lucky. So that's what that's all about, is stay away from. And the stock market news, that's a little different. The stock market news is something that can be used to hype up stocks, and then you start thinking, wow, I need to watch that stock because everyone's talking about it, and you start talking yourself into taking a trade that you shouldn't have because maybe that stock never made it into the top 3 volume or whatever your criteria is for taking a trade. So I don't listen to any stock market news. I don't trade any stocks that have any kind of hype behind them unless they just so happen to also be in the top 3 volume. They meet my criteria. They also have my setup. If everything is meeting my criteria, I don't care if the stock is a hype stock or not, if it's in the news, if other people are talking about it or other people trading it. That makes no difference in whether I take a trade or not. It just has to meet my criteria. Then this is extremely important for me. Number 1 goal, no yellow trades. I used to have goals like, I want to make X amount of money per trade or X amount of money per month or percentage per month. All that kind of stuff is bad news. You're going to set yourself up for failure because you're going to start forcing trades and let me just take one more trade to get to my goal, that kind of thing. So my number 1 goal is not even to be green at the end of every month. My number 1 goal is no yellow trades. What that equates to is my number 1 goal is to trade by my plan and my rules 100% without breaking them or bending them at all. And if you do that, at least at the end of the month, even if you're red, you know that you did everything right according to your plan and your strategy. And 2 things could be the cause for that red month. It could just be a bad month. Even great traders that are extremely disciplined, they have a red month once in a while. But if you have red month after red month after red month and you're not taking yellow trades, you're following your plan and your strategy, then that's a sign that your plan and your strategy is not that good. That's also very valuable information, right? I mean, you need to know how to make your plan and your strategy better. So then I explicitly say what this is. And then this is really the key to it all, is that I have to stop trading for the month if I make 1 yellow trade. So that's really powerful stuff. And that's what keeps me motivated to not break my rules because, hey, I want to trade for the whole month, really not just to see if I can make money, but to see what the results of this plan and the strategy are. I can't collect any data on this plan and strategy unless I take, a large number of trades. So I want to be able to trade for the whole month, so I better not break or bend any of my rules. And these are the rules that I'm talking about. These are just some of the rules. I have other rules that I'll show you as well. Only enter a trade during pre-market from 4 to 4:30 a.m. Again, that's kind of a personal thing. You have to figure that out on your own. Only trade stocks in the top 3 volume of the top 3 gainers screener. That's my criteria. Float size of around 100 million shares. I talked about that. No more than 110. That's kind of the cutoff, unless it's the number 1 stock, right? And then stock must be trading higher than the previous aftermarket and intraday session. I talked about that. That's part of my setup criteria. Maximum of 3 trades each day. So even if all 3 trades lost, I can't go in for a 4th trade even if the setup looks perfect. You have to draw the line somewhere, because what if the setup looks perfect, you take that 4th trade and the 4th trade fails on you? Now what do? You've already broken your rules. Do you keep trading and trying to make that money back, or you get where I'm going here? So you just have to draw the line somewhere, and sometimes you have to take a red day and even 3 losses in a row. It happens. Stop trading if you make a green 2R trade. This is a personal thing, but so far it looks like this also makes sense mathematically as well. Is if actually, you know what? I can't really say that, because the only way you could test this kind of thing out is if you actually make a green trade, your 2R trade, and then you continue to take the following 2 trades. But I don't really feel comfortable testing that at this point. I guess if I were to test that, I would take the following 2 trades with maybe 1 share only just to collect the data, because the worst thing to me that could happen is I have a great winning trade, the very first trade, and then I guess this, you could say, would be getting greedy, is that you think, oh, I'm doing great and I want to see if I can get more money, and you take 2 more trades and they both go against you and you end up giving back all your gains. Just think about how you would feel psychologically, and especially going into the next trading day. That's really going to affect your psyche. So I don't want to do that. I don't want to give back my profit. So if I get a green 2R trade, even if it's on the very first trade, I stop trading. That's actually ideal when that happens. But maybe it's on the second trade and I just have a small green day because the first trade was a loser. Or the third trade is the one that goes to 2R, meaning that the first 2 were losers and now I'm just break even or maybe even slightly red. Doesn't matter. If I get a green 2R trade, I stop trading. Simple as that. So there's a lot of redundancy in these rules, and that's really important. If the first 2 trades fail, then this tells me I have to take the third trade as long as it's my setup and it's not past my cutoff, right? The only exception to that, if it's the same stock. Let's say I've taken the first entry on that stock, it failed. The second entry also failed. If that stock is still in the top 3, meaning that it has a high probability of giving a 2R trade because there's a lot of volume there, then I still have to look for the third entry and take the third entry on that stock. And usually if that happens after 4:30, it's not very long after that. And that's because my statistics tell me that generally that trade is more likely to work out. So that's a good way to scientifically, make back my losses. And that's usually the way it works out. Occasionally I do have 3 losses in a row, and that's just part of trading, especially if it's in the same stock. Okay, so we went over that. Just very specific instructions here. And that's really important. Each trade will be 10% of position size. That's what I feel comfortable trading with. Even when I realized, okay, I have a winning system here, I bumped it up to 15% at one point, and I didn't feel comfortable with that because if I had 3 losses in a row, it was a considerable loss to the account, maybe 2.5–3%. And I know the golden standard is never risk or lose more than 2% of your account per day. I think that is a little bit high for a small cash account. That is a rule that is used by people with large accounts that are generally trading with margin. So 2% to an account that you're trading constantly throughout the day is a very different thing to 2% with a small cash account that you're only taking up to 3 trades per day. So that's where I came up with this 10% position size. Generally, if I have a losing day, it's less than 1%. If it's a worst case scenario where all 3 trades lose, it'll be about 1.5%. And that's plenty to lose on a small account like this, believe me. It's hard enough to make that amount back. So the only pattern we can trade is the ABCD pattern. Again, redundancy and repetition, that should be part of your plan. You want to drill these ideas into your head. And this explains when the pattern fails and when I can no longer look for an entry on an ABCD pattern. So read that. That should make sense. Don't think about red or green. Talked about this a little bit, I think, already. Just profit at 2R, stopping out at 1R, no scaling out, because I did that for months and I tracked all my trades and the results of that were not good. I ended up red overall. 1R includes your actual stop and actual entry. This is an important detail. I kind of eased into this strategy and I was a little bit scared to trust it at the beginning because it wasn't proven, and I used to use my desired entry price. So let's say I wanted to get in the stock at $5 and I got some slippage on the way in and it was $5.03. And instead of using that $5.03 as my entry to calculate my 1R risk, I would use the $5. And then I ended up, leaving money on the table most of the time. So that's why this is there. And you have to think, if the trade fails against you, you're taking a bigger risk than your 2R profit target if you don't use your actual entry. So if there's no lower floats in the top 3 volume, don't trade. Again, that's kind of an older rule, which I do follow to a degree. But again, the number 1 volume stock, I trade that regardless of float size, as long as it's below 500 million shares. Sometimes you get them in the billions of shares float size, and those are worthless to trade because if you're just scalping momentum like I do, you're not going to get any movement that's going to make you any money that's worth taking a trade on. avoid stocks that are trading right around a dollar. Stocks that are right around a dollar even move very strangely, and they're also difficult to trade because you have to buy 100 shares regardless of what your normal position size is. Your minimum is 100 shares, right? So basically you have to spend $100, and right now I'm trading 10% of my account size, which is around $660. So right now I'm trading with like $66, so that kind of explains that. There's no volume between 4 and 4:30 a.m. Take the rest of the day off trading. This is, again, an older rule when I used to trade more sessions, which is, I'm going to be coming back to that soon. So I keep that here because this is an important thing. I've had instances where I've lost 3 trades or there was nothing to trade between 4 and 4:30. And I trade later on in the day at the market open and things are still not working out and I lose 3 more trades or whatever. And I just decided to take that as a sign when there's nothing between 4 and 4:30 a.m. That's a sign of weakness in the market and things are probably not going to be better later on. So here, this is like the worst day that happened was the Monday of Christmas. There was no volume, and I think I lost 3 trades in the pre-market, and then later on at the market open, there was more volume, and I thought things were safe, and I ended up losing 3 more trades. So that's where that rule comes from. Simple as that. More about the setup, and this 3 or 4 bar play thing is kind of old. I don't really do that anymore. Stop is always the low of the previous candle. That's really important, kind of like that entry thing. This is regarding my calculation of my profit target. So, and then there's one exception to this. If the candle that I enter on is lower than the previous candle, which that does happen, then I use that as my stop loss, because generally that means that the candle previous to the entry candle is very small and that type of tight stop doesn't really make sense. So, because even if you win the trade, you're not going to have a big win, and you're likely to get stopped out of the trade anyway. Don't analyze the price action while you're waiting for the price to come back and break through. This was a specific rule. Basically, something happened one day where I was making a live trade video, and I'm talking about, well, this is an entry you could take if this meets your criteria, even though it's below the high of day, blah, blah, blah. I ended up taking the trade, talking myself into it, and then the trade failed, and the worst thing about it was because it didn't meet my criteria anyway. I just talked myself into it because I was trying to explain one possible entry that some people might take, and I said, you know what, let me just take it and see what happens. And the trade failed, and so that's where that comes from. Always know your stop and target before entering a trade. That's really important, at least graphically on the chart. Know, okay, if the candle goes below this point, I have to stop out. If the candle gets to this area, that's my profit target. Usually I have plenty of time to calculate your profit target, but sometimes you get in a trade and it flushes down. So at least know, hey, if the price goes below this previous candle, I have to get out. And then if you have a moment to figure out exactly what that price is, do that. So as soon as you enter the trade, get your 2-hour limit sell order out. That's again because sometimes you get into a trade and the thing just flies up in your direction and heads to your profit target. So you want to get your order out quickly because sometimes these things pop up, hit your target, and they reverse and you missed your opportunity. So you want that limit sell order to be out there. You don't want to use your hotkeys because oftentimes it'll hit your target and everybody's selling at that same target and the thing comes down and you lose 5-10 cents per share slippage on the way down. So that's what that's about. And then I have like a little quick guide that's pretty redundant, so I'll just let you read that. But that is kind of just a quick reminder after reading all that other stuff that this is basically what I'm looking for. Here's a nice little kind of graphic of the basics of an ABCD pattern. This line represents the high of the previous session. It most likely would be the high of the aftermarket. And so let's say that maybe 4 a.m. is over here and I'm watching this thing take off. I can't do anything until it breaks out through that previous high. Then I look for the first pullback, and as soon as 1 minute candle makes a new high, then I take that entry, and then this would be my stop loss just below the previous candle. So that is statistically the safest entry you can take, and that's why I take that and only that. And that's the end of the April 4 a.m. trading plan. If you're still sticking around, there is one more really interesting thing I want to tell you is that in April, I'm going to be test trading at 7 a.m. there, and I'll go over those rules. I'll make a different video because this one is already going to be really, really long, but basically going to be trading at 7 a.m. and I have a slightly different plan for that, which I'll go over maybe after I make a video with one of those trades. So look out for that. Let me know if you have any questions about this trading plan. Hopefully you get the main idea. It's not so much to be trading exactly like I am, but you can see that you really need to write everything out and be very specific and be very redundant, because you don't want to find yourself in a situation where you don't know what to do. You know, you don't want to be in a trade and go, I don't have anything in my plan or my strategy that tells me what to do in this situation. So, and that'll take time. You're going to think that you've got it all down, and then something's going to happen and you're going to go, whoops, I don't know what to do now. And that's okay. That's when you go back to your plan after that trade is over and update your plan so that the next time that does happen, you know exactly what to do. All right, take care. Always take your stop losses no matter what. Honor your profit target, and you should be green in the long run. I'll see you in the next video.